So right now there's $65 trillion that wants to deploy into Bitcoin, but currently believes it cannot. And the reason it believes it cannot is that it thinks that Bitcoin is not good for the environment. Now, we now have the data to be able to turn that around. And if we care about the next wave of institutional adoption and sovereigns investing into Bitcoin, then this is our number one priority, to turn this around. But then the question comes, well, why should we care about sovereign wealth fund adoption? Well, there's a couple of reasons. Number one is that we're not going to hit $13 million a coin or even $150 a coin without this community of people. And you might think, well, that's not what I'm part of this ecosystem for, simply number go up. But there's a reason that everyone here should care deeply about number go up. And that's that we live in a world of hippies and nerds. And yes, it's possible to be a hybrid too. Now, nerds tend to care more about numbers and hippies tend to care more about freedom. And in Bitcoin, nerds tend to care more about number go up and hippies tend to care more about freedom go up. But here's the thing, these communities are interdependent. For example, in order for a lot of these freedom go up projects to take effect, there needs to be a certain mass of institutional capital and market cap behind Bitcoin to enable these projects. So sovereign wealth funds are critically important to freedom goes up too. So who are these sovereign investors though? Well, right now we've got 4.7% of the global population that has some exposure to Bitcoin. So we're early. The next group of people, the early majority, they're different from us. And I'll give you an illustration of how they're different. So raise your hands if you're skeptical about what you read in the mainstream media. Okay, is there anyone who's not raising their hands? Right, so we are different to this next wave. They are only somewhat skeptical about what they read in mainstream media. And as a result, they have some very different beliefs and a very different starting point when it comes to Bitcoin. Here's some of the things that they say, and this is from my talks to people at sovereign funds and interfacing with the sovereign wealth fund ecosystem. Just take a moment to digest that in a minute, and I'll just stand here in silence while you read that and elicit whatever emotions you feel like eliciting. So we're early, huh? We are so early. So how do we start to turn these sorts of perceptions around? And the answer is to do three things. Number one, before we start, we've got to actually screen out all the noise. And that's before we even start to identify what the false signal is around Bitcoin and ESG. And finally, only then can we actually start to impart the pure signal. So let's start with noise reduction. How do we screen out a lot of the noise that's out there? It's a very noisy world, and there's a lot of noise about Bitcoin. Well, interestingly, the way to counter noise and environmental FUD about Bitcoin is not to start talking about Bitcoin. It's to understand that we live on this continuum where every single disruptive technology that has ever come to the planet has been met with exactly the same narrative. This is something that I discovered running my first technology company. If you're going to bring a disruptive technology to the world, you're signing up for a lot of misinformation from the people who get disrupted. And this has happened from every technology, from the telegraph right through to Bitcoin. An unbroken stream of 21 technologies across 160 years. Let's zoom in a little bit. Here's some examples in the media of how the media has appraised certain technologies that were disruptive or disruptive devices in the past. So long before Bitcoin was posed as an existential threat to the human race, the teddy bear was. So we've been here before. Let's zoom in a little more. Now, I could have chosen any technologies, but I've selected two which disrupt multiple different industries at the same time. The first one is the bicycle. Not many people know this, but this is currently the most ubiquitous form of transportation in the world still. It came to prominence in the 1890s, and when it came to prominence, it disrupted not one but 4 industries: horse and buggy, riding apparel, public transit, and the railway. Yeah, absolutely. And a lot of trenched people were not so happy with women suddenly having a tool of emancipation. So it had not one but 4 different industries lobbying against it. And boy, did that show up in the media. My favorite one here, if you're talking about outlandish predictions of the future, we've seen this before. 75% of all bike riders will be an army of invalids within 10 years. Where have we heard outlandish predictions about the future before? Now, finally, the medics and the academics settled upon 4 or 5 conditions which you could definitely get from riding the motorcycle: bicycle insanity, bicycle spine, bicycle heart, and bicycle face, my favorite. We can even, because I'm a data guy, of course, I mapped the data of this, and you can even chart the instances of bicycle face, and so I did, through history. Oh, but first, this created the environment where suddenly people felt there was enough moral outrage where we can start calling for bans and restrictions, and that started to occur. Here's the graph. So bicycle face. This term started in 1891, peaked 7 years later, but the term was used for another 30-something years. We had a lot of this FUD with the bicycle. Okay, so maybe that was just a historical anomaly. It couldn't possibly happen twice, could it? Okay, let's look at the radio. Disrupted 4 industries: print media, the telegraph, live entertainment, and record industry. Suddenly, the radio was blamed from everything from explosions, breaking windows, killing birds, droughts, even snowstorms. Finally, the medics and the academics settled on 4 conditions which the radio could definitely cause, and causing, including softening of the brain. You think you've had it bad with Bitcoin? We've heard the story before. This created the outrage where suddenly people felt emboldened to start calling for bans and restrictions on the radio. And we can chart the negative media coverage of the radio. And does this look familiar, this chart here? Well, it is. It's the same chart as the bicycle. In each case, you had this initial wave followed by a period of almost 40 years of FUD. We are not going through this for the first time. Bitcoin disintermediates at least 4 industries. We're currently around about here in the cycle. Now, do you see why this context is really important? See, if you're going to ask people who are not as suspicious as you are naturally about the media to suddenly disavow anything they read in the media, you better have a good reason for that. And the good reason is very simple. You don't have to ask them to not believe everything they read in the media, but you're asking them to exercise discretion because there is a reliable track record across 160 years of the first couple of decades of media reporting being incredibly inaccurate, and that is the context into which Bitcoin enters. Knowing this actually helps you screen out about 80% of the noise on Bitcoin. We haven't even talked about Bitcoin yet. Okay. Once we've screened out the noise, we can start to talk about false signal. Now, in the case of radio and the bicycle, the false signal was provided largely by academics and by medics. In Bitcoin's case, it was provided mainly by central bankers. And particularly this paper here, which, what's that? Academics, exactly. This word here is very important, commentary. Now, I had to look up the meaning of commentary within the context of an academic journal. According to Nature magazine, one of the world's 2 most reputable scientific journals, a commentary is something that, number 1, has gone through a lighter peer review process. Number 2, it tends to be shorter. This one here was 5 pages. And number 3, it is allowed to echo the writer's perspective as opposed to introducing new data. In other words, it is the academic equivalent of the difference between a feature article and an opinion piece. It puts forward the author's perspective. Alex DeVries's perspective was that, hey, we can measure Bitcoin's emissions per transaction and show that its energy usage will get totally out of hand as transaction volume scales. Give the guy credit where credit's due. The year before his article, there was 1 article in the media about Bitcoin and energy. After his commentary was published, more than 400. Cambridge immediately debunked the metric as not a meaningful metric in the context of proof of work consensus mechanisms. Do you think this stopped the media reporting on it? No chance. In fact, not only did they continue to report on it, but regulatory bodies, central banks, and NGOs joined the super spreader event. The metric went on to be debunked 4 times in peer-reviewed articles. But again, far from discouraging the spreading of this metric, it went on to not only spread but to mutate. We went from energy per consumption to emissions per transaction to e-waste per transaction, and finally, water per transaction. All the work of one author, Alex de Vries. So this was patient 0, and if we follow this through, this is actually a chart here produced by Litmaps, one of my investee companies, which maps like a phylogenetic tree of where articles come from. And as we can see, the origin for all these articles was a single paper by Alex de Vries in 2018. We can also trace how many articles it spawned. So Alex de Vries and the papers who reference him have now been responsible for 4,500 citations. That's a lot of citations. 10 papers are derivatives of this one flawed metric. The metric was picked up, and Alex de Vries was quoted in the White House report on crypto mining 4 times more than the next highest author. For Greenpeace, it was the epistemological basis for their entire Change the Code campaign. Now, there's a bit of a problem with the per transaction metric, though, and that's it, as a lot of you here will know, Bitcoin's energy consumption does not actually come from its transactions. But to suggest it does suggests that as Bitcoin scales, its emissions and energy will get out of hand, whereas in fact we can see from the graph here, if you follow that pink line, hash rate's going up 8 times over the last 4 years. Price is going up 6 times over the last 4 years, but that pink line in the middle, they're staying like a heartbeat. Emissions has not increased. There's a second problem with this emissions per transaction metric, and that's something called semantic ambiguity. Now, to give an everyday example of what semantic ambiguity means, let's imagine that you and I enter into a contract. You're going to do some work for me, and I'm going to pay you handsomely, $1 million for completion of that contract. You complete the work, upon which I then present you with $1 million Zimbabwean dollars. Now, you're feeling a little bit aggrieved about this relationship, about this point? Well, that's because different words, such as $1 million, have very different meanings in different locations, just as the word transaction has a very different meaning in different locations. One fiat transaction means what? A ledger entry. But in the blockchain world, a transaction can mean more than 2,000 traditional transactions, or using the layer 2 networks such as Lightning, billions of transactions. To fail to mention this is not only misleading, but disingenuous. The metric is fundamentally flawed. The logical basis for all FUD is as robust as it was for the bicycle and the radio. Now, in years to come, maybe 10 years' time, people will look back at this era of history and they'll go, those guys in the 20s, did they really believe that a single Bitcoin transaction could drain a swimming pool of water, be responsible for 2 iPhones worth of waste, $100 worth of electricity consumption, and 3 households worth of emissions? Those crazy people. How gullible they were. I'm glad our media is much more reliable in its reporting these days. So false signal is the second point. And only once we've dealt with the noise and the false signal, now we're in a position to actually start to tell the story we want to tell, which is the pure signal. Let's talk about that story. Now, there's been a phenomenal, here's the good news, there has been a phenomenal turnaround in the last 2 years. The academic literature is now, well, 3 qualities that have changed. Number 1, we're getting full papers, not commentaries. Number 2, they're anchored in a good understanding of how the blockchain actually operates. And number 3, they're using full contemporary data sets, not anecdotal data sets. As a result of this, we're now for the first time getting pure signal in triplicate, where the mining industry, The people in adjacent industries to Bitcoin mining and the academics are all saying the same thing, and that's this, that Bitcoin can solve fundamental problems, fundamental large environmental challenges of our time. It can help to decarbonize our grids, stabilize our grids, and mitigate our most dangerous greenhouse gas, methane. Now, the press has also started to come to the party. As we can see, the amount of negative coverage has started to taper off over the last 2 years. And in parallel, in the last 2 years, we've actually flipped to net positive reporting on Bitcoin and energy. The transition happened, if we zoom in a little, around March of last year. And here's an example. Financial Times, who used to be one of the chief architects of misinformation on Bitcoin, now is starting to cautiously change their tune, which is why I say we're about here in the cycle. We've done incredible work, but there's more work to do. At the same time, we've also started to debunk some of these myths around e-waste, for example. One of the world's top electronic recyclers in the world has confirmed that not a single part of Bitcoin ASICs goes into landfills, that it's 100% recyclable because it contains none of the heavy metals that traditional electronics do. In terms of water FUD, well, far from creating water scarcity, we've actually learnt that Bitcoin can create water abundance in dry places such as the UAE, where you have these desalination plants. Running Bitcoin, you can use a heat exhaust to make the desalination plant more effective, therefore doing more desalination per kilowatt hour. And this whole narrative around Bitcoin is used by criminals was debunked by none other than the US Treasury, who in their 2024 money laundering report stated that fiat currency is by far the most preferred vehicle for cyber criminals. At the same time, this narrative that Bitcoin has no use case has been well and truly debunked by Alex Gladstein at the Human Rights Foundation, who showed that it has no fewer than 19 different humanitarian applications, which are benefiting, we estimate, more than 100 million people already today. Meanwhile, the environmental benefits of Bitcoin are now up to 21. That's a good number. And continue to grow. We're not going to go through all 21 today, but let's look at some highlights. Two things are important here. Bitcoin is now using, we are very confident, more than half sustainable electricity. And number two, that its emission intensity, that's the amount of emissions that it emits per unit of power, has dropped lower than any other single industry sector. Now, why is this important? Because Bitcoin obviates that which goes before. So in the case of Bitcoin, every time you use it for a transaction, you're not having to use a banking system, which is more emission intensive. Every time you're using Bitcoin as a store of value, you're not having to use gold, which is what I used to use in the past before Bitcoin, as a store of value. Both are more emission intensive industries, and therefore you are net emission reducing. The academic papers have started to catch up. This one is a full academic paper from Cornell University from a decorated scientist who said that using Bitcoin mining, you can make renewable operators more profitable, therefore accelerating the renewable transition, which is exactly the same as what the CEO of ERCOT said. Bitcoin can find a home for more renewable energy on the grid and then counterbalance their intermittency once it's on it. In fact, if we look into the history of what's occurred in the last 2 years, it's phenomenal. We now have the consensus of grid owners and the academic community endorsing the positive environmental benefits of Bitcoin. Now, a bit of context. Some people might say, well, that's all very well, but it still emits emissions. So I'm a climate tech investor, and this context is important. Every single technology, every single industry I've ever invested in emits emissions to start with. There's no such thing as a technology which doesn't initially contribute emissions. That's not the point. Solar, for example, was invented in the 1950s. It took until 2011 before it paid off its carbon debt. That's 57 years. And the reason was that it was using these coal furnaces to melt silicon to 1414 degrees, huge amounts of emissions. I remember having arguments with other environmentalists in the 1990s about whether it could ever go net emission reducing or not. If we'd applied the same logic to solar that we do to Bitcoin, we would have banned it in the 90s. So two things are important as a climate tech investor, which is a lens I see the world from. One is the net emission reducing capacity, and the second is the payback time, the carbon debt. Another example is carbon sequestration. 28 years we've had the technology. It's nowhere close to paying off even its carbon debt. With Bitcoin, we estimate that it can pay off its carbon debt within 30 years, less than half the time of solar. This is phenomenal. Now, here's the bit that I'm most interested in. Bitcoin provides us a method to mitigate one of the world's most potent greenhouse gases, and that's methane. 84 times more warming than carbon dioxide over a 20-year period. According to the United Nations, it is our strongest lever to mitigate climate change in the next 25 years, and yet very little has been done about it. Now, you may not know this, you certainly wouldn't know this by reading the mainstream media, but there are currently 5 Bitcoin mining companies that are mining using landfill gas power. 29 that are using carbon negative sources of energy. These are people who are using landfills, farms, and methane from the oil and gas industry, destroying a potent greenhouse gas that would have directly vented into the air and using it to power the future of sound money. And we can chart the emission reducing impact this has on the network. Currently, using this form of energy, 7.5% of all Bitcoin emissions are being mitigated. There's not an industry in the world who's come anywhere close to that without offsets. Well, naturally, the question emerges, when do we hit 100%? 35 landfills. Venting methane with Bitcoin mining operations is all it takes, and we have an emission negative network. Now, because these mining operations on landfills are also mitigating methane, they generate carbon credits, which juices everyone's returns. And that means the landfill owner's happy because they get to turn a waste into a form of monetizable asset. The Bitcoin mining company's happy because they get power at the bottom third of the cost curve. And we're happy as the financer because we get our returns juiced by carbon credits on top of the interest repayments. But the most exciting thing is that per dollar invested, this is mitigating 45 times more emissions than if we were to deploy this into a solar farm. So I say LFG, which of course stands for landfill gas. What did you think it meant? Progress report. So I'm going to share some data here which I haven't shared with anyone before. So where we're at, we've been talking about this for a while. Well, I'm pleased to say that we've found a Bitcoin mining company who's very adept about being able to mitigate this particular form of climate change inducing greenhouse gas, GridShare. And this is Tom in the middle, the CEO of GridShare, with his team, visiting a landfill in South America. Now, to give some context, this landfill you see in the background here, it's 24 kilometers away from the grid, interconnection point, which means it is cost prohibitive to be able to sell power back to the grid. It is purely stranded. The only option, if they couldn't do Bitcoin mining, would be to vent it into the air, which is what they have been doing for the last 2 decades. Some more context, that thing above there is the world's largest ever direct air capture project. It mitigates 5,000 tons of CO2 emissions per year. Not bad, huh? Well, this landfill with Bitcoin mining on it will do 114,000 tons per year. That's 23 times the world's largest ever direct air capture project. That gives an idea of scale. But we're not stopping with one landfill. Here's one of the 2 that I visited in Costa Rica, my adopted hometown recently. This one here, because of bureaucracy, has no option to be able to sell to the grid at all. And this one can mitigate 103 times more than the world's largest ever direct air capture project. Here's one that Tom visited recently in Ethiopia. It's an open dump. The locals and the authorities are desperate to do something about it because methane also causes massive health issues from all the residents who live near it. This one can mitigate 114 times more emissions than the world's largest ever direct air capture project per year. One environmentalist I was talking to said, well, you know, if Bitcoin could mitigate 10% of its emissions, that would change my viewpoint on Bitcoin. So what would it take to go beyond 10%? 2 of these landfills is all it would take, and we would hit 11% methane mitigation already. So Bitcoin can solve some of the toughest environmental challenges of our time. Now, are there other technologies that can mitigate methane? Of course there are, there's many, but that's not the point. The point is, are there other ones that can do it profitably without government incentives? To which the answer is almost universally no. Bitcoin is unique. So we can really start to use this data and this information to turn around the perceptions of these sovereign funds and also the people who generally have environmental hesitations around Bitcoin, helping them change the narrative legitimately using data. I want to make sure that you all feel empowered to be able to unleash this data. So I'm open sourcing all the stuff, all the references, all the source material. It's gone up on Twitter, it's in a reference, you've got a big link, and you can find it there. Because I can't do this alone. We all know people, and this is preventing people from being able to get behind Bitcoin. There's a whole lot of liberals right now who don't think they can invest in Bitcoin because they don't know the humanitarian story and they don't know the environmental story. There's a whole lot of sovereign wealth funds that will not invest because they think it won't tick their ESG box. But we now have the data to be able to turn that around. Now, I said at the beginning that we need number go up projects to help the freedom go up projects, but it happens the other way around too. Unless we have more freedom go up projects, then we won't have more number go up, because these are the results and the stories they create is what inspires the next wave of institutional investment. So, on one hand, one investor can bring energy abundance to 1,000 villagers in Africa, but also the smile on the face of one villager can inspire the next 1,000 people to adopt Bitcoin. Thank you.